Guys, in this video, I'm going to show you my exact trading strategy that I use on a daily basis to catch at least 20 pips in the market. Now, most of you guys know that I am a swing trader, but most of the time I also do like to dive into day trading and also scalping. Though I trade 80% of my trades on a swing trading or position trading basis, but occasionally I do day trade and also scalp the FX market. Now, in this video, I'm going to show you a 20 pips a day strategy that I use, and I'm going to show you my exact steps that I use to take these trades. Remember, guys, do follow the video from the beginning to the end so that you don't miss any of the criteria that you need to follow in order to make this work. Most of you guys go ahead and ask questions because you don't watch the videos until the end. Watch this video until the end and you will be enlightened about the strategy and the methodology that I use to find 20 pips a day using this method. So guys, let's go on to the charts and I'll show you this strategy right now. So guys, we are going on to the charts now. But remember, if you're new to the channel, my name is Matthew. I am a forex trader and I do a lot of free content on this channel. You'll do me some kindness by leaving a like on the video, smashing the subscribe button, and also commenting down below with your thoughts. So with that out of the way, let's go on to the charts now. So we are on the gold chart here. This is the 1 hour chart. And I want you guys to follow me from the beginning to the end, guys. Don't skip the video, just watch the video and let us all learn how this strategy works. A very simple strategy that uses the break of market structure for a continuation of a trend or something like that. Okay, so we will use we'll get an area. Let's start from here. Okay, so this strategy, what you want to do is you want to first identify the current trend of the market. Is it a bullish trend or is it a bearish trend, or is the market consolidating? Okay, that's what I do. The first thing I do. So when I come in, okay, what I do, okay, let's use the 15 minutes chart because we are going to be day trading. We're going to look for 20 pips a day. So we'll use the 15 minutes chart. Okay, yeah, we'll use the 15 minutes chart. So this strategy works and works incredibly well. Okay, it works and it works incredibly well. So what you want to do is you want first identify where the market is going. For example, if you're trading here, okay, if you're trading here, you want to identify whether the market is pushing to the downside or is the market pushing up like this. Okay, just first identify the current market trend. All right, so once you've identified current market trend, you want to look for market structure, or you want to find your market structure. Like in this case, we had a high here, we had a low, we had a higher high, we had a higher low, we had a lower high, lower than this high, and then we had this low broken here. Okay, now this is what I want you guys to pay attention to mostly, right? Let me change the color of this to white, okay, so that we can see clear. Let me zoom in here. Now, when you're trading this methodology, what you're looking for is a break of market structure. Break of market structure and a pullback. Okay, so here we have a break of this level here. Okay, we had the market push up to make a high, come down to make a higher low, higher than this low, and then it pushed up but failed to make a higher high. Okay, made a lower high, lower than this high, and then it came down and took out this higher low to make a lower low. Okay, so when this happens, this is when you get ready to take your trades. Normally what I do is, because I understand the fact that market does not move straight up or straight down, it keeps on making these retracement moves. Okay, so when I am looking to take these trades, I look to take these trades after there is a break of market structure and then there is some sort of pullback. Okay, if that pullback pulls back into or above or below a level that has been broken, what I do is I look for candlestick patterns or candlestick formations to take a trade. In this case, we are looking for candlestick formations after a retracement. You can also use a Fibonacci tool here, okay? You can use a Fibonacci tool here if you like. Like, you can pull a Fibonacci from this high, okay, to this low, like this, okay? As you can see here, the Fibonacci comes to a 38 level here. This is a 38.2 level of Fibonacci. Now, when this happens, and then you see 1, 2, 3 black cross, okay, you can take your short position there. I don't know if you guys are seeing the Fibonacci very well or clearly. Let me just see if I can make this a bit more visible so that you guys can appreciate it, okay? Let me just change the color of this, okay, so that you guys can see clearly the levels, okay? Let's make this more visible, okay? So I think this is clear. You can see here on the left, the price pulls back to the 38.2 Fibonacci right here. Then it gives us this bearish engulfing candle, okay? You can take your trade here, or you can take it after the three black cross, okay? Whatever you choose. If you want to do a sniper entry, you can enter on the bearish engulfing candle. If you want to be sure, you can enter on the third crow, okay? Now, for this case, I will enter on the third crow right here, okay? My stop loss will be above that retracement point, 38.2, and then I'll look to take my profit at this previous low, okay? I'll look at targeting this previous low or this previous low, which is down here, okay? Can also target this low here. So you can say take profit 1 here, take profit 2 right here, okay? So you can see that this trade will win. But how many pips are these? How many pips are we looking at here, okay? Now, in this case, we are looking at 29.3. So this is, let's see, on gold, this is 29 pip stop loss. And this is a 1 to 4. This is about 80 pips, okay? This is about 80 pips on gold, or 100 and something. Let me just put it at 1 to 2 so that we can get the pips more accurately, okay? So this is about 63 pips right here. But if you want just 20 pips, you can see that if you come down like here, your 20 pips are basically this place here. But me, what I'd like to do is to look for at least a 1 to 2. So this strategy will give you a minimum of 20 pips, a minimum, bare minimum of 20 pips. If you're looking for a 1 to 1, you can get 20 pips here, okay? But this is what I recommend you do a 1 to 2 always with your trading. A 1 to 1 is okay. If you're getting your trades and you're monitoring your trades, it's fine. But me, I like to take a 1 to 2 at least for a risk to reward, okay? So this is like your first trade. That will be your first trade. So we'll remove the fib level, okay? Also remove this, and then we'll look for another trade, okay? So you are also looking at market structure forming, like here, it's a low, lower high, lower low, lower high, okay? Lower equal lows, okay? Higher high here, okay? Now, when this higher high is broken, you are waiting for the market to give you some sort of pullback, okay? Before you can enter a trade, okay? So that is what you're looking for. You're looking for pullbacks. Now, when the market pulls back here, okay? For example, when it pulls back here, let me first get rid of this. Let me first get rid of this. When the market pulls back here, this is the high, okay? This is the high that was broken. This one is the high that has been broken here, okay? So you're waiting for some sort of a pullback. You're waiting for some sort of a pullback. So how do you measure your pullback? You can use your Fibonacci to measure your pullback. at the levels where you could enter. So you move from this previous low to the previous high, like right here. Okay, so your pullback happens into the golden zone of Fibonacci. I showed you a Fibonacci level strategy before. So it pulls back into your Fibonacci here. So what happens here? Of course, in this area, you would get in. We could get in here, put our stop loss just below the golden zone of Fibonacci. Okay, and then we would target like a 1 2 2. I want to show you this. Okay, 1 to 2 minimum. You can see that this trade would work. Okay, this trade would work. Even if you said, let me enter from here, let me enter from here. Okay, even if you said you're entering from here, okay, and your stop loss is just here, okay, or below, or at the golden zone, whatever, you'd still get some profit, right? But me, I recommend you to get in at the golden zone here. You can put your trade setup at the golden zone here. When price reaches there, you can take your profit, okay, at the next high here, or you can just take a 1 2 2 like this, and then you keep on going. So you can use Fibonacci to measure your retracements to get your entries, and also use market structure breaks to time your entries correctly. So guys, I don't want to make this video very long. Just go and backtest this video, backtest this strategy, guys, and you will be blown away at how it works. Okay, it will work magic for you. In this case, for example, let me just show you this. Okay, there is a high, higher low, higher high, which takes out this high. Then there is some sort of pullback here. So here, let me just take this out. This is the high that is broken, this one. Okay, so you can use your Fibonacci, measure from here to the high, so that you can measure, get a retracement. So okay, so in this case, price pulls back into the golden zone here. Okay, and then you are looking for entries around here, right? You're looking for entries around here. You can enter here when this, for example, these bullish candles close, okay? And then your stop loss is below the golden zone Fibonacci like this, and then you're targeting 1 to 2. 1 to 2 like this, okay? That is how you trade this. You can just go and try to backtest this, and guys, you will be incredibly happy that you watched this video and you saw this strategy. I don't want to make the video too long, otherwise I would show you the really detail of how this works. But if you want such a video, do leave your comment down below. I may come back and do a more detailed video, which is maybe 30 to 45 minutes long, if you guys can watch that long. So guys, with that, thank you for watching. Until next time, peace and out.